Bismillahirrahmanirrahim. Rabbi zidni ilma, Rabbi shrah li sadri wa yassir li amri wahlul uqdatan min lisani yafqahu qawli. Bismillahirrahmanirrahim. Before we start the paper, we ask Allah subhanahu wa ta'ala to help us. We are doing 0452 paper 22 February March 2023. I have already solved the first three questions of this paper, and today we will be doing the fourth question of this paper, inshallah. So let us begin now. So as you guys can see now, we have the question on the left hand side and we will be doing our working on the right hand side. So the question says that Adya is a trader. She buys and sells one type of good only. She has provided the following information. She has her revenue, purchases, expenses and other incomes. Okay. And on the 31st of October 2022, she had her inventory. Okay. Trade receivables, trade payables and bank overdraft. The inventory and valuation at 31st October 2022 are double those at 31st October 2021. So now it says complete the following tables. Alright. So now in this question basically we have to solve ratios, and once we are done solving the ratios we have to give our comments on those ratios. So as you guys can see, it says 31st October 2022. Everything over here is closing. Alright, all of this, for example, closing inventory, trade receivables, closing trade payables. Now, when it says the inventory quantity and the valuation at 31st October 2022 are double those at 31st October 2021, what does this statement mean? Basically, our closing inventory for this year, it's 7,500. Alright, and the question says that the previous year, at 31st October 2021, previous year, the value of inventory was half of this year. So, actually, let me bring the calculator here. We will be dividing it. We will be saying 3,700 divided with 2. So, it's 3,750. So, this is actually going to be our opening inventory now. Okay. So the first part is that we have to find gross margin. Now what is basically gross margin? If you guys want, I'll even show you guys the formula that I over here have. Where is the formula for gross margin? Look, gross profit margin basically means gross profit upon revenue multiplied by 100. Okay, gross profit upon revenue multiplied by 100. If you guys want this formula sheet, do mention in the comments below. I'll send it to you guys as well. So first of all, right over here, gross profit upon revenue, multiply this whole thing by 100. So now what is our gross profit? How do we find our gross profit? Gross profit is actually sales minus cost of sales. Cost of sales. We already have the figure for sales, but we do not have cost of sales. So now we have to calculate cost of sales as well. So cost of goods sold, opening inventory plus purchases minus closing inventory. So our opening inventory, like I said, this is our opening inventory. So 3,750 plus purchases. These are our purchases, 6,2305. And you subtract it from your closing inventory, which is 7,500. Okay. Now 3,750 plus 6,2305 minus 7,500. So your cost of sales are 5,855. Okay. So cost of sales, let me go down here. Cost of goods sold. Cost of goods sold is, let me check over here, 5,855. Okay, 5,855. Now, in order to find gross profit, what will we do? We will subtract sales, which is 98,000. Subtract it from cost of goods sold, which is 5,855. Let's do that as well. 98,000 minus 5,855. So we have 39,445. We have 39,445. So in place of gross profit, I will write 39,445 upon revenue, which is how much? Our revenue is how much, guys? Our revenue is 98,000, okay? 98,000, and multiply this whole thing by 100. Let me do that for you. Upon 98,000, 39445 divided by 98,000 multiplied by 100, we get an answer of 40.25. Alright, so since we have to give answer to two decimal places, so it's 40.25%. Alright, so our gross profit as a percentage of our revenue is 40.25%. Okay, next question, it says profit margin. Profit margin basically means net profit. Look, it means where is net profit, alright, divided by revenue multiplied by 100. So net profit divided by revenue multiplied by 100. You guys don't use these short terms, only I am using them, but just to be on the safe side, guys do the whole thing. So how much is our net profit now, guys? In order to find net profit, you will do net profit basically is gross profit, subtract your expenses now. So our gross profit was how much? 39445, okay? 39445, subtract it from your expenses. Okay, you will subtract it from 31188, alright? And you will add other income. We have other income 4630, we will add it. So I'm just writing it over here, plus you guys write everything inside the box, 4630. Okay, so 39445 minus 31188 plus 4630. So 12887. Our net profit is 12887 divided with our revenue, which is 98,000. Multiply the whole thing with 100 again. 100 again. So answer, divide by 98,000, multiply by 100. So it's 13.15%. 13.15. Okay. Next question, it says rate of inventory turnover. Now look, what is rate of inventory turnover? Rate of inventory turnover is cost of sales divided by average inventory. Okay. So cost of goods sold or cost of sales divided by average inventory. Now guys, do we have cost of sales? Yes, we do. We already calculated it. Cost of sales is 58555. So an average inventory is basically your opening plus closing inventory divided with 2. So average inventory is equals to opening, which is 3750, we calculated it, plus 7500. Divide this whole thing with 2. 3750 plus 7500, divide it with 2. So we get 5625. So cost of sales is basically how much? 58555. 58555 divided by your average inventory, which is 5625. Okay, let us do it in the calculator. 58555 divided by, so it's 10.409 is equals to 10.409. Since you have to write it to like two decimal places, this will become 10.41. Alright. Moving on to our next question, which says liquid asset test ratio. Look, what is the formula for asset test ratio? It's right over here. It says current assets minus closing inventory divided by current liabilities. Okay. So I'm going to just write it down for you guys over here. Current assets minus current closing inventory divided by current liabilities. Okay. Current assets minus closing inventory divided by current liabilities. So look, what are your current assets? Your current assets are your inventory, closing inventory 7500, plus your trade receivables 9240. So your total current assets are 16,740. 16,740. Your current liabilities are trade payables, which are 53. Let me write it again. 5365 plus 5135. So your total current liabilities are 5365 plus 5135. So 10,500. Okay, 10,500. And your closing inventory, we already know that 7,500. So current assets, which are 16,740, subtracted from 7,500 your closing inventory, divided with 10,500. Let's do it now. I don't need this, sorry. 16,740 minus 7,500 divided by 10,500. So it's, what is the ratio? The ratio is 0.88:1, which means that for every 0.88 assets you have one liability, one current liability. For every one current liability, your current assets are 0.88. Okay, so now next question. It says Adya's purchases price has remained constant throughout both years ended 31st October 2021 and 31st October 2022. Alright, so her purchase price has been remaining constant. The following information relates to Adya's business for the year. Her gross margin is this. Her profit margin is this much. Rate of inventory turnover is 12 times. And liquid asset test ratio is 1.15:1. Comment on the changes in gross margin. So look, how much was her gross margin before? Her gross margin was 40.25, right? And the previous year, 40.25 is now. And before, her gross profit margin was 37.60. So comment on the changes in gross margin. So look, if you guys notice, let me write over here 2022 so that you guys don't get confused. This is 2022, this is 2021. Gross profit margin has improved. So you guys will say gross margin has, I got a message, okay, it's my mom, I have to reply her in a while, has improved. This might be because of, now you guys have to state the reason. This might be because of, what can be the reasons? For example, this might be because of an increase in the selling price. My mom again, selling price of the product. Another reason can be, it may also be because of decrease in discounts allowed or discounts offered, discounts allowed. Okay. Now, next question, it says the liquid asset test ratio. So look, before it was 1.15:1, now it is how much? 0.88:1. Before, for every one liability, current liability, you had 1.15 worth of assets. Now, basically, what has happened over here? Has it increased or has it decreased? Our liquid asset test ratio, the liquid asset test ratio has decreased. Alright, now you guys have to mention the reasons why it might have decreased. By the way, if you guys want a theory booklet, in the theory booklet I have mentioned all the reasons. For example, why is there an increase in gross profit margin or decrease? Every theory I have written it. If you guys want the theory booklet, do let me know. Do mention them on the comments below. I will send it to you. Okay. So now your asset test ratio might have decreased because maybe due to increase in her current liabilities. Alright, or decrease in her what? Decrease in her liquid current assets. Another reason can be more funds might be tied to her closing inventory. Look, if closing inventory is huge, our overall current assets also decrease. Alright, so this might be the reason. So now it says advise Adya whether she should reduce her selling price. So it says Adya is concerned about the increase in inventory over the years. Her inventory is being increased because maybe she is not able to sell as many goods as before. She is considering reducing her selling price to increase the quantity of goods she can sell. Advise Adya whether she should reduce her selling price. Justify your answer. So guys, in this question, first of all, you will mention reasons why why she should reduce her selling price, and then you guys should be mentioning reasons why she should not be increasing her why she should not be reducing her selling price, and then you guys can give your conclusion. So let's talk about reasons for reducing, I'm just making an arrow, her selling price. So look, first of all, as obvious it seems, she should reduce her selling price to encourage more sales. This is the first reason, okay? Secondly, to reduce her inventory or the stock attached to her inventory, okay? Besides that, reduction in inventory might help her to save money on storage cost, because she might be storing her inventory in a warehouse. Storage cost. Alright, so this is for 5 marks. Now let's talk about reasons she should not reduce the selling price. Okay, first of all, if you guys reduce your selling price, it will reduce the gross profit margin. This is the first reason. So that's why she should not reduce her selling price. Customers might become doubtful. And may not purchase. Why? Because look, before the prices were high, now the prices have decreased. So as a customer, you might think, oh, the prices might decrease again, so why I should not purchase now. And the last reason is that if you decrease your prices, of course you will be earning less revenue per unit. So in your conclusion, you should say that instead of reducing her selling price, what Adya should be trying to do is try to reduce her overall expenses. Alright? And besides that, because it says that Adya is concerned about increase in inventory, okay? Because she's concerned about her overall inventory levels, what she should be doing is she can focus on improving the quality of her products. So that's how more individuals would be encouraged to buy her product, because always reducing your prices is not the solution. Sometimes giving better quality products might result in higher sales. Okay, so one of the limitations of financial statement is there is a gap between the end of the financial year and the preparation of the financial statements. Explain how this limitation may influence Adya's decision about whether or not to reduce her selling price. So first of all, before I even answer the question, or before we answer the question, we need to understand what the question means. So look guys, let's say you guys are in a business. Your business ends on December 31st, 2023. Okay. exactly on December 31st, your financial statement will not be available. It will take time. It might take 2 or 3 months for your financial statement to be prepared. So this is the meaning of the question. So explain how this limitation may influence Adia's decision about whether or not to reduce her selling price. So first of all, Adia's decision about changing the selling price will not be reflected in the current year's what? Current year's financial statements. In the current year's financial statements. So she might not be willing to reduce the prices. Secondly, she needs to consider the amount of inventory that she still has today. Alright, so now I hope you guys were able to understand all the questions clearly. So if you guys still have any questions, please do mention them in the comments below. If you guys do not understand anything, do mention them. I'll try to explain it again. And if this video was helpful, please do like and subscribe. It would mean a lot. Your support at this point in time would mean a lot. So bye bye guys. Take care. Assalamu alaikum.